just 2 days, the world's largest cryptocurrency, Bitcoin, fell from above 110,000 to 103,000, wiping out billions in market value. But what caused this sudden drop? And should investors be worried? Let's get right into it. Let's look at the numbers first. On November 1st, 2025, Bitcoin closed around $110,103. A day later, on November 2nd, it climbed slightly higher to about $110,586, showing strong momentum and investor optimism. But by November 3rd, that optimism quickly turned into panic as Bitcoin dropped sharply to around $107,934. And now, as of November 4th, it's trading near $103,400, down more than $7,000 in just 48 hours. This dramatic decline represents a 6 to 7% crash, something that has sent shockwaves across the entire crypto market. So, what really caused Bitcoin to tumble so fast? Well, there isn't just one single reason. Several factors came together to spark the sell-off. First of all, profit-taking played a huge role. After Bitcoin surged above $110,000, its highest level in months, many traders started locking in profits. This sudden wave of selling created downward pressure, causing prices to dip. Secondly, market uncertainty grew after new data hinted at potential US interest rate hikes in the coming months. When interest rates rise, risky assets like Bitcoin tend to fall because investors shift their money towards safer returns like bonds or savings. Third, there was a wave of liquidations across major crypto exchanges. And when Bitcoin prices fall quickly, leveraged positions get automatically sold off. These forced sell orders often accelerate the crash, creating a domino effect. Lastly, some analysts believe that large institutional investors temporarily pulled back due to volatility fears and global risk aversion, especially as stock market also showed weakness in early November. It's not just Bitcoin, but the entire stock market also felt the shock as well. For example, Ethereum dropped below $5,000, Solana slid around 8%, and many altcoins saw red across the board. And part of the reason is global uncertainty. Recent statements from central banks and regulators around the world have hinted at tighter financial conditions and more oversight on digital assets. Investors fear that a stricter environment could limit short-term speculative gains. Social media platforms like X, which was formerly called Twitter, was flooded with posts from panicked investors and crypto analysts sharing their predictions. Some of them warned of a potential dip towards $100,000, while others said that it was just a healthy pullback before the next rally. Several major crypto influencers and analysts have pointed out that such volatility is normal for Bitcoin. In fact, short-term drops of 5 to 10% are part of its long-term growth cycles. Others believe that this correction can be an opportunity for long-term investors. Historically, every major Bitcoin rally has faced multiple pullbacks before setting new highs. Still, with such rapid changes, I would suggest you what I say in almost all of my videos: never invest more than what you can afford to lose. So, the big question now is, what's next for Bitcoin? Well, if it can hold above $102,000 to $103,000 support zone, analysts expect a potential rebound towards $108,000 in the coming days. However, if it slips below $100,000, we could see more pain in the short term. Technical analysts are watching the next major support at $98,500, a level that has previously sparked strong buying activity. Despite the short-term drop, many long-term investors remain optimistic. Bitcoin's upcoming halving event in 2026, along with increasing institutional interest, are still viewed as positive long-term drivers. So while the $7,000 fall may look scary now, it might just be a shakeout before the next major move. So stay cautious, stay informed, and always do your own research before making any investment decisions. With that being said, this brings us to the end of this video. I hope you found it helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. Thanks for watching.